Shreyas Devalkar has to manage large oodles of money to give returns to his investors. He's head of equity at Axis AMC. He joins us right now on the show to talk about his view on the market. Shreyas, if you are long only, and I'm presuming you are, then you wouldn't have any complaints with the RBI policy that's kind of given a big boost to equity sentiment. But how are you seeing the landscape from the current valuations amidst all of the geopolitical news flow around us?
Yeah, so definitely in last 6 to 7 months, actually, all the steps taken by regulator may it be in form of improving liquidity, the regulation over NBFC banks, everything actually is actually towards driving growth, both for the retail credit as well as overall credit growth of India. Now, here, when it comes to the repo rate cut, what we have seen is almost 100 basis points from peak. And how much it will drive the economic growth. So if you just see the historical analysis of it, again, every time the situations have been different. And but then broader point is 100 basis point is a good rate cut. But in my opinion, some more would be needed for economy to revive even further. Reason being, last time, whenever there has been rate cut, it was also complemented by one, which is exports as a sector had done well during those time, and that's where, along with rate cut, we saw economic revival. This time around, the difference is export as a sector because of global turmoil, led by tariff, obviously, indecision, is not really supportive of the growth. And secondly, the fiscal. So earlier, whenever there had been the rate cuts, it was both monetary and fiscal policy. This time around, again, as far as fiscal is concerned, we are rightly focusing on measures to curtail fiscal deficit as well as curtail the loan to GDP. That is most important. So hence, in my opinion, yes, this rate cut is good and welcome move from monetary policy point of view. But because of, again, if I want to compare it with the earlier data points and earlier instances, the other two things are different now compared to earlier.
Shreyas, very good morning. Tamanna here. I'm just wondering if the infra play is something that has been largely ignored relatively. I mean, we're all looking at banks, we're looking at IT, based a lot on what's happening globally. But are you seeing green shoots here in the entire infra play and maybe hidden stories that have not yet been spotted? I'm just wondering what you're thinking about the real economy push kind of an infra play.
See, as far as infra is concerned, actually, compared to, again, earlier cycles versus now, we are actually ignoring one fact is earlier, lot of infra play used to be in the private sector as well as, and hence, because of that, in the listed space. Today, a lot of infra is happening, and around you, you are seeing it, whichever cities you are located, but it is not getting captured in exactly the listed space, and that too directly, the way it used to get earlier. That is one of the key reasons why you don't see the kind of movements which we have seen in earlier cycles in the infra stocks. Well, if you go to and look at the specifics like power spend, it is getting reflected in the entire power pack, whether it is utilities or it is capital goods sector. The capex on after power, there is electronic manufacturing services where private sector is spending. That is getting reflected in the prices. So as far as pure play infra is concerned, actually when it comes to infra, mostly it is about what? Road, power T&D, both generation and T&D, and railways. And now again in the railways, it is getting reflected in this. So probably what I would call out is that the road is the only segment where, because of the change in models, it is not getting reflected in the listed space, while everywhere else it is getting reflected.
Just in terms of ancillaries, and you spoke a little while earlier about the consumption boost, and if you look at it, it's actually 2 or 3 pronged. You have your tax cuts now flowing through, what was announced in the budget. It'll start flowing into people's accounts, etc. You have then the RBI booster coming in. If you have to look at that consumption play, how would you look at it, Shreyas? Would you look at it, say, with paints, with cables and wires, with those kind of accessories, or quick commerce?
So everything, especially multiple drivers are there in multiple of this component. So when it comes to consumption, we look at in 2-3 ways. One is definitely pure play FMCG, wherein it's more of a macro story. Apart from macro, it's rural, urban, and then again there are certain nuances whether individually those companies are driving the growth for their segment or not, or whether some other companies are taking away their market share. So in that sense, FMCG as a category has not grown for now quite some time. So that's where when it comes to consumption, let's keep that aside. And there I would say that it would more depend on the macro overall GDP growth, where it may drive it. But other part of consumption, and some of them you alluded to, they are very interesting, which is one part is obviously quick commerce. The other part is retail industry. Many retail companies in India are doing well. Actually, one of the analysis we did and found that actually the retail industry's growth is broadly similar to now the food delivery growth. At industry level and growth number. Generally, the perception is that, okay, the food delivery growth is much higher, but actually some of these retail industries and retail companies are growing as good as food delivery. So that net the retail industry, the food delivery, the consumption at the upper part of K, which is also getting reflected. So high-end hotels industry, tourism, travel. So there are multiple sub-segment of this consumption, and most of them are actually doing well, barring few. But obviously they have a large weightages in the indices, which includes, as I said, FMCG. There are the consumer durable that has not shown a trend where they have shown a structural story. So important part is whether this consumption plays, they are doing something different, whether they are disrupting, whether they are creating new market, whether launching new products. So the value creation as a shareholder is more lies into that, rather than just expecting that because of some policy action somewhere entire thing will turn around. If you just go back in 2017, if you recollect, every year everyone used to expect that now the capex cycle will start. But with the confluence of multiple events, actually you saw it post-COVID. Now we are expecting as a consumption as a pack will do well now for 3 years because of the base effect or whatever reasons. But point is that you have to focus on that bottom up, whether the companies are doing something differently and whether they're creating value.
So, okay, Shreyas, so to your mind, which companies are doing this? I know you can't name stocks, but I mean, sure. Within where in the consumption basket are companies doing that slightly different to warrant a look at from an equity fund manager?
So if you look at our portfolios, and I would probably take some sub-segments of consumption from our portfolios itself, then our portfolios are definitely, as I highlighted, are less in FMCG. Definitely, they are more in the retail space. So the retail can be in apparel, it can be in jewelry, it can be in a mix of apparel plus grocery and so on. So that is one definitely as I highlighted. The second part is quick commerce, and that also is part of our portfolio as of last month end, which you can see. Apart from that, as I highlighted, the travel, and here there is a case of a different story. So here the story is of less industry already getting consolidated. So actually telecom, high-end hotels and airline. these three industries have got consolidated actually, and they are beneficiary of that apart from the overall demand. So every subsegment have their own drivers, that either it is industry consolidation or it is finding a niche, especially in the retail space where every retailer is finding a niche for them to operate into, and where the daily execution is much more important. And whoever can do that daily execution day after day, month after month, year after year, they are actually winning on ground. So such stories we have good exposure to.
Okay. Okay, Shreyas, point well noted. Thank you so much for taking the time out and being with us, and looking forward to talk to you soon.